Good morning, my friends. It's Stephen Woloszyk from Prime Lending, and today's Tuesday, September the 12th, and that means it's time for Tuesday's 2-minute tip. Two things I want to cover today. Number one, why you need to be wary of third-party sites showing you what mortgage payments are, and number two, just how important your credit score is when it comes to interest rate and mortgage insurance. Borrower reached out to me yesterday. I have a property of interest. I know I told you I didn't want to go higher than 260, but I wanted to see if I qualified for this one. I looked up the property. This one. Gorgeous looking property. Listed at $299.9, and it shows a payment of $1,090. Sounds fantastic, doesn't it? $1,100 for a $300,000 home? Well, if you click on the calculator, you get a little bit more detail. It says that payment is with 20% down. It assumes the best interest rate, and it wasn't including the taxes or the insurance. Taxes on this property are $407 a month, and this particular third-party site assumes $75 a month for insurance. Well, I told my borrower she was approved, and I worked up an estimate, and the payment came out to be around $2,300. And she was like, whoa, put the brakes on. That's way too much. I was figuring around $1,700 a month. Why the big difference between payments? Well, number one, the interest rate was not the best interest rate because our borrower has a little bit lower credit score. And number two, my borrower's putting 5% down, not 20%. And that means my borrower needs mortgage insurance. Now, if we take a look at mortgage insurance rates with this chart I made up this morning, they differ based on increments of 10 for the credit score. So if you have an 800 or above credit score, you're looking at about $100 a month for the mortgage insurance with 5% down on this particular property. Now the premiums look pretty good, up to a score of about 760. Drop below 760 and above 680, and you've got a range of between 285 at the high end and 152 on the lower side. But here's the key. Look what happens when we fall below a 680 credit score. My borrower's premium was over $400 a month for mortgage insurance. More in mortgage insurance than the monthly taxes. So that's the importance of having a high credit score. Fortunately, I'll work with this particular borrower and we'll get that credit score bumped up, but this should show you just how important it is if you're going to need mortgage insurance. Also, please be skeptical, cautious about these third-party sites and what they're showing you for a mortgage payment. They're usually assuming the absolute best case scenario. Best to talk with a realtor professional when you're looking for a home and a mortgage professional to get that payment dialed in. That's Tuesday's 2-minute, or looks like 3-minute tip. I thank you for tuning in, hitting like, sharing, and commenting. And listen, as always, make it a great day.